Good day traders, this is the daily market update live from the Tradelo trading floor. It's Thursday the 9th of May. Some highlights from today's show is the BOE set to follow the ECB, Yentervention is incoming, and the German DAX is again at record highs. Let's kick off today, talk a little bit about the markets. They are asleep. The VIX is now back below the 14 mark, and this suggests that conditions are likely to remain tricky with prices moving neither here nor there. Obviously, the key risk event now is the market wants to know what happened with inflation over the month of April in the United States. And we get that print early next week, and that's what the market really wants to understand now. They need to get an understanding of how far away is the Fed from beginning the process of cutting rates. Obviously, Powell came out just recently and told us they still think rate cuts are on the horizon this year, and they don't think the recent uptick in inflation is anything more than seasonal effects. Now, going into today, there is one little key risk event, and that is the Bank of England coming up with their latest policy response. In terms of expectations, nothing really. They're not expected to cut today. They're not expected to change their statement today. They're not expected to do a great deal and change much from the previous BOE central bank meeting in March. Now, what they are expected to do is give us an updated set of forecasts and expectations in terms of where they think inflation will be going forward, as well as where they think growth metrics will be. Now, there will be some attention paid to that, but by and large, Bailey has told us everything is moving according to plan for them. What we do want to pay close attention to is when do they see interest rates, inflation rates coming back to that 2% target in the medium term. Now, in terms of today, what traders will be paying attention to is the vote. It is expected to come in 8-1 with Dingra again voting for a cut as of today. There's not much expectation anyone joining. However, do keep a close eye on that. Should we get something like a 6-3, what that does do is it opens the door to the BOE kicking off rate cuts as soon as June. And that's important. Why? Because the ECB is going in June. Who else has started cutting rates? Well, the Riksbank cut for the first time yesterday in 8 years. The SNB, the Swiss National Bank, they cutting as well. And Bailey has told us that they no longer think they need to move in tandem with the Fed. And that matters because typically the BOE always moves in tandem with the Fed. Now, if they are detaching themselves, they are very, very much likely to move in tandem with some of the other European countries. Now, pay attention today as well to the statement. Not much expected in terms of a change there. However, there is one key line that we want to pay attention to. BOE maintains its guidance that they think policy needs to remain sufficiently high for sufficiently long. Now, that's expected to be repeated, but if that gets altered in any way, gets adjusted in any way, what it suggests is that the BOE is quite comfortable with beginning the process of cuts as soon as June. Now, it's not a question of whether or not they're going to cut. It's a question of when they're going to begin the process of cutting. And that's pretty much what Bailey has told us. He's told us they're quite confident that rate cuts are incoming quite soon. What he just needs is a little bit more consensus from his deputies. We obviously saw Ramsden step down from his typical hawkish stance and tell us he thinks rate cuts are coming soon because the risks are now tilted to the downside. However, his other deputy, Pill, told us rate cuts are not coming anytime soon. So there's still very much a split on the board. And it's very likely that Bailey is going to want a little bit more consensus before they begin the process of cutting rates. Now, do note the BOE is very much a majority rules type central bank. They are not about unanimous decisions. So we don't need anything more than 5 members to vote for cuts. We do have one member that's guaranteed to vote for a cut today. However, the bar is very high to get 4 more members to vote today for a cut, but also to perhaps join in for a June cut. Now, what markets are thinking 2 cuts this year, and that's what we're looking at the chart. We can see since the beginning of the year, if we look at the Sonia curve, the market was very much leaning on 6 rate cuts from the BOE this year. They've priced out 4 of those pretty much over the last 3 months. Now, what that means is the bar is very, very high, or at least the market is quite dovish based on what the BOE is telling us. And what's the BOE telling us? Well, they're telling us inflation is about to come in line with their 2% target as soon as this month, okay? Now, they do think this is likely to be temporary and inflation will tick back up. But what it does mean is that should we see inflation remain low, should we see inflation, perhaps miss to the downside, what that does suggest is that the market is a little bit too hawkish relative to the BOE. Okay, right now market thinks 2 cuts this year. They're looking at an August start. Why? Well, because that's when we get the next set of updated forecasts, as well as then a second cut at 2 meetings later, which will be November. So the market's expectation is for the BOE to cut rates at every other meeting. And that's why the market is set up very, very dovishly versus what we could get. Now, pay attention to the pound. Why? Because we're sitting on last week's lows. And what that means is there's likely to be a little bit of activity around there, a little bit of volatility around that 124.70 level. Watch out for that flush and bid knee-jerk type price action. What we typically see on these BOE non-events, the algorithms get happy, they get excited, they take out some interesting levels, and then that's it. The market retraces the entire move. So keep an eye. That is the base case for today, some sort of a knee jerk, so long as they do not signal a June hike via a change in the statement. Now, moving on, Yentervention is on the horizon. Taking a look at that yen chart, what we can see, the market is retraced 2.4% of the move from last week. So the yen or the BOJ intervened twice last week. They spent 60 billion to try and prop up their currency. The reality, though, is we are now almost all the way back to that second level of intervention, which came in at 157.50. Okay, keep in mind, the BOJ wants to keep defending this currency. They do not want to give speculators the upper hand. So it's very likely that we're likely to get some form of intervention if that yen continues to weaken. Now, one key level to pay attention to is that 156 marker. Why? Well, because if you draw a retracement, a Fibonacci retracement, and you believe in technical levels, the first level of intervention, we retraced 64% of that move before the BOJ fired their second round of intervention. So keep an eye. We're at that 64% retracement now at 156. Pay very close attention to it. It does look like we're going to get some intervention, perhaps today or in the early hours of tomorrow. Don't forget, Ueda has told us, as of yesterday, he's told us, look, this is a concern. This is a problem. You know, if we do keep seeing the yen weaken, that is going to filter into higher inflation. And the BOJ may have to increase the number of rate hikes in order to stem that flow. Now, the market doesn't believe that. The market doesn't think they're going to do that. The market thinks they're bluffing. And that's why the yen continues to weaken. No one thinks the yen's actually in a position to be able to hike interest rates anytime soon. So it does mean that the only other sort of ammunition they've got is to buy up their currency and use some of those reserves. So keep a close eye on that. And then finally, the DAX is back at record highs. Now, if we look at the timing of the April bottoming, it came pretty much around the ECB meeting. Why? What did the ECB tell us? They told us they're going in June. They told us they're comfortable going in June. And they told us that it's likely we're going to see a series of rate cuts at every other meeting. So the DAX is now back at record highs. We're printing cash record highs again. But one thing to pay attention to, we're a little bit overbought in the near term. Don't forget, as of October, so just 6 months ago, we were trading 27% below where we are. So we've seen a 27% rally in the DAX over the course of the last 6 months. Now, that in its own is definitely not a reason to be short, but it is perhaps a reason for the market to continue to breathe and pause around these record highs. Now, pay very close attention. What we should see over the coming sessions is just a little bit of sideways activity. We are a little bit overbought, particularly over the last 4 or 5 sessions. We're up 3.5% over the last week. So pay attention. We should see some sideways trade, but then early next week, a resumption of that trend into record territory. What that does mean, we're now pretty much moving into uncharted waters. And when the market typically goes into price discovery mode, it's not something you want to fade. You don't want to be going against that. Hop on that trend, stay with that trend, keep being a buyer on dips. Otherwise, stand out the way and let other traders partake in the upside. All right, that's then a rundown for today. As always, make sure you manage that risk, take it easy, go make some money.